everybody, it's John King with Summit Funding, and it is Friday, the 4th of August, and I'm super excited to tell you about a milestone that we hit yesterday. By the way, I'm not excited. It's kind of sad, but it's the reality, and I can't be sad about reality because it is what it is. The milestone, highest mortgage rates in 26 years. That's right. Yesterday, August 3rd, Thursday, we hit the highest mortgage rates that we have seen in 26 years. So the first thing I'll tell you is go hug a realtor. Go say thank you to a loan officer. Go say we appreciate you. This industry is dealing with some major issues right now. If you're a loan officer or a realtor watching this, we all are feeling major pain. And our pain is not getting any better anytime soon. Our market, there's no inventory out there. If you're a consumer, if you're a homeowner, if you're a potential buyer, you know this. Nobody's selling their homes right now. Who wants to sell their home that has a 3% rate and get a loan that's at 7.5% right now? Nobody. So your inventory is really low. Realtors have nothing to sell. There's some sales happening, but there are more realtors in the United States than there are listings. There's more realtors than there's business to be done. It is very much right now the haves and the have-nots. And most of the haves don't have very much. Most of the people in this industry are dealing with issues that other industries dealt with in 2020 and 2021. Our industry was super busy. Everybody wanted to buy homes. Everybody wanted to refinance their home. We are what's called anti-cyclical. We're dealing with the opposites at the opposite times as what the rest of the economy is. But oftentimes we're leading that charge. Oftentimes we're on the bleeding edge of the economic cycles. And that's something to watch out for. The Mortgage World, I was sharing an article with some peers the other day that are in different business owners in different industries, talking about what's happening with the mortgage and real estate world and how it's really not expected to get any better until April. As a matter of fact, the stat that I read said 50 to 70% of loan officers will be gone by next year compared to the number that were here this year. That's right. So if you know 2 loan officers, it's likely one of them is going to be gone by January of next year. That's scary. The same thing's happening in real estate. Everybody's getting a side job. Matter of fact, everybody started getting side jobs a year ago. Today, everybody's saying, I think real estate's my side job. I think I need to go do that other thing as a full-time job. I think mortgage isn't for me anymore. I can't do it. Now, here's the good news. I'm not talking about me. I'm in this for the long haul. I've been doing it for 23 years. That honestly means I have never in my career seen rates as high as we are right now because we're at 26-year highs in interest rates. I was at a training the other day and there was a down payment assistance program that was being talked about and it had a rate in the 8s. And another loan officer said, oh my gosh, that's horrible. Nobody would ever do a loan in the 8% interest rate. And the smart aleck in the back of the room, me, says, hey, it's just a number. It's just a number. Remember when house prices were $200,000 to $300,000 in the Central Valley? And now they've doubled. From 2011 until today, they're more than double what they were. Yet, is everybody complaining, oh my God, I can't buy a house because the price is so high? Kind of. But the fact is, it's just a number. Your income has continued to go up. Your rent payment has continued to go up. It's just a number, and this too shall pass. So for my peers, stick it out. If you want somebody to follow, somebody to talk to, somebody to guide you, I'd be happy to give you some advice and share with you what I'm thinking and what my company is talking to us about, because really what's going on in your head really, really matters, okay? What you're thinking is what you bring about. And so if you're in the industry, if you're in a related industry, if you're a home inspector, if you're a title company, you've got to really get your head straight because nobody has good interest rates right now. Nobody does. The opportunity to buy a home. I had a client that just got into contract last night, bought a house over $600,000 in the Sacramento area, negotiated a seller credit of 3% of the purchase price, and using down payment assistance. So literally this client is getting into a $600,000 home with about $2,000 out of pocket. Okay, that's paying for inspections, that's paying for the appraisal fee, that's paying for the earnest money deposits, and they're getting a grant for some of that down payment money. They're paying they have a second mortgage for the rest of the down payment money. The options are there, and they're taking advantage of it because they recognize they have the opportunity. They recognize they don't have the competition today that they thought they were going to have, that they would have in the future when interest rates go down. And in the future, they get to refinance at a lower rate instead of having to worry about competing with all those people that in 2023 were scared. We're afraid to make a decision. Let's go back to 2011. My wife and I were selling our house and moving to Roseville, and I'm in the mortgage industry, and I'm a firm believer in home ownership. And I said, honey, we sold our Outgrove home and we were going to move to Roseville. And I said, honey, the market's been falling for the last 4 years since 2007. Maybe we should rent. Maybe we should wait until we hit the bottom and not buy a house. And she slapped me. Okay, she didn't really slap me. But she said, really? I'm not going to be a renter. I don't want to be a renter. You believe in home ownership. I believe in home ownership. We need to buy a home. We need to ride this out for the long run. Even if prices go down, we're going to be better off having our own home and having a tax write-off, having the stability that comes with it. And so a lot of people were scared between 2011 and 2007 and 2011. They were scared, not wanting to buy a home. But if you could rewind to that time, homes were so much cheaper than they were today. My wife and I bought a home in 2011. We sold it in 2020 and made double our money. Double our money buying in 2011 in Roseville and selling it in 2020. Okay? Because we took a risk when everybody else was scared. And you need to realize this is your opportunity to do that. There aren't a lot of people that are going to do it, especially as rates continue to tick higher. More and more people are getting scared. But think outside the box. I've got another client who's consolidating their business. They're transitioning from one business to another, getting rid of one of their businesses, I should say. And they've decided, hey, instead of buying a commercial property for the new business, let's buy a home that has land that I can use for the business. And that way I can save money. So they're selling their current home in town and buying a house on the outskirts of town that has land that they can use to hold their business equipment. It's going to save them a bunch of money because they don't have to buy commercial land. They don't have to rent commercial space. And they're killing two birds with one stone. They're resetting their tax bases because they bought their home back in 2015-ish, 2016. And now the prices have gone up significantly. They get to restart their capital gains exemption. Think about that. You stay in your house too long, your capital gains currently, and I don't know when this will ever change, but currently says if you've lived in the home for 2 out of the last 5 years, as an individual, you can write off, claim as pay no taxes on up to $250,000 of gain or increase from what you bought it for compared to what you're selling it for. If you're a married couple, you can get up to $500,000 of gain and you don't pay any taxes on it. When you sell one house and go to another one, that number starts over at that level. Now, as prices keep going up, you have the opportunity to gain on the growth of that home and sell it tax-free also. So this client had maxed out their gain. We're pretty close to maxing out their gain. So they're killing multiple birds with one stone by not having to worry about commercial property that's going to cost them a bunch of money, and their business gets to write a check to them personally. So it's a win-win. The business helps pay for their mortgage payment. Now is the opportunity to decide, what do you want your long-term goals to be? I'll go back to the beginning and say to my peers in my industry, whether you're in real estate, mortgage, or a related industry, you got to realize the opportunity that we have in this industry is amazing. If I could be in a position where somebody said, hey, I'll give you an industry that you're going to have 17 years of really, really good earnings and 3 years of just horrible income and challenges and strife and stress and frustration. But in order to get the 17 goods, you have to take the 3 bad. That's out of 10 years, you've got 8.5 good years and 1.5 years bad. Would you take it? I would, every single day. But you've got to be able to survive the bad years. A lot of people in the industry, they didn't save enough. They've still been spending even though they don't have the income coming in the door. And they put themselves in a position where they've got a bunch of credit card debt. They don't know how to afford to continue to survive, and they don't have a choice but to go get a real job. I'm seeing posts on Facebook talking about, hey, I finally got out of the volatile mortgage industry and I'm into something stable. I don't know what's stable. I was telling that story to a restaurateur the other day, and she chuckled and she said, what do they want to do? Go become a restaurant owner? There's nothing stable about owning a restaurant. You become a state worker. Another guy that was on the call says, I was a state worker for years. The state would freeze my paycheck because they couldn't make a decision in Sacramento on how they were going to balance the budget. And so they stopped paying everybody. Is that stable or is that volatile? I'd call that pretty darn volatile. There isn't, talk to the people who worked in construction between 2000 and 2008. That was a great industry until it wasn't. And then it went away. And then the challenge was in 2015, the builders came back and said, hey guys, ring, ring, you want to come back to work for me? And they said, nope, I don't want to go back to work for you because I was burned once and I don't want to do it again. Restaurant workers in 2020 said, the restaurants were shut down. We couldn't work. I don't want to work in a restaurant. I got burned by the restaurant industry because I couldn't make an income because COVID shut down my employer. Nobody was going out to eat at restaurants. Servers were on unemployment. They lost a bunch of money. And then they said, I'm not going to do it again. I'm not going to work in hospitality because it's burned me. I'll go work in mortgage. I'm going to become a real estate agent. That's a stable job. There's no such thing as stability. Everything in life is a risk. Everything in life is a risk. And sometimes you take the risk and you fail. But I'll guarantee you one thing. The biggest wins come from taking the biggest risks. Just be smart about the risk that you're taking. Be ready. Save away some money for the challenging times. Because even if you are a stable income earner that gets a W-2 and a salary and you make the same amount of money every single month, no matter what, guess what? No matter what never happens. Something can come up. Something will happen at some point in time. Maybe it's disability. Maybe it's you just not having enough insurance and being in a position where you get in a pretty bad accident. And a lot of people will tell you that getting into a bad accident and surviving is sometimes worse than getting into a bad accident and not surviving. A lot of us have life insurance, which is really death insurance. But how many of us have good disability, long-term care insurance? That's life insurance. That's insurance for living if you survive a major medical issue. So nothing is guaranteed. Nothing is guaranteed. Do what you need to today to live the fullest life that you can without taking stupid risks. And for people who aren't in the industry and you're thinking about, hey, I was thinking about becoming a homeowner, but John, you just scared the heck out of me that nothing's for sure. You're right. Nothing is for sure, except that your landlord's going to raise your rent sometime soon. Your landlord may even call you up and say, hey, my cousin's moving into town and I want them to move into the house. Or, hey, you know what? We're downsizing because our expenses have gotten too high. So we're selling our big house. We're moving back into our rental. You're living in our rental right now. We need you to get out. Here's your 60-day notice. Money's getting tight for everybody right now. Credit card debts have skyrocketed. I just finished doing a live stream talking about how to get out of debt because so many people are in so much debt. There's $1 trillion of credit card debt out there right now, up from $600 billion in 2015. Huge increase in credit card debt, and it skyrocketed. It ballooned in the last 2 years. People are having to make tough decisions, and your landlord is one of them. So you need to be the one that's in charge. You need to be the one that says, I'm going to take that step to home ownership. The first step is giving me a call. The first step is for us to have a conversation and figure out, are you ready or not? And what's it going to take to get you ready? The last thing I want to talk about today, and if you stayed this long, you get the bonus. The bonus that I want to talk about today is a little bit of update on my thinking about the California Dream for All program. The California Dream for All program has been announced back at the early July that we would get a timeline in the fall on when the Dream for All is going to be released. There's been so much misinformation out there. People are saying, oh my gosh, the money's coming in the fall. I had somebody call me up and say, hey, John, one of my clients told me that the Dream for All money's coming in the fall. And they said that, well, the kids are going back to school right now. And they say back to school happens during the fall. So as far as they're concerned, it's fall right now. So is the money out? That's a pretty good way to kind of get from there to here. But first of all, they never said the money's coming out. They never said the money's coming out in the fall. They said they were going to announce the timeline. I've given this a lot of thought, and here's what I think is going to happen. I think the rules are going to change. I think the states, as a matter of fact, I'm positive the rules are going to change, because right now the state agency, Cal HFA, is waiting for the trailing bill. The money's been allocated, but the rules for the money hasn't been allocated. And the state assembly, the Senate, is not back in session until September. So they can't even start meeting and talking about this stuff until September. But when they meet and they figure it out and they say what the rules are going to be, and I'm worried some of those rules are going to be geographically based. I was listening to some of the subcommittee hearings from earlier this year after the first release of Dream for All. And there was a lot of questions about where was the money used? Like what counties got the money and what counties didn't? And when senators and assemblymen start sniffing around a little bit, they start worrying about their district. They start worrying about, hey, I want to make sure my people got our fair share. They may put some rules in that say, hey, only so much money can go to each county based on the size of that county. I also think the state recognizes the flaw of the first time around. Last March, they released the money as a free-for-all. Come one, come all, send us your purchase contracts. Don't worry, we'll take care of you. And the money disappeared way quicker than anybody expected. People had to rush to find the home that they didn't love, they didn't really want, that they didn't know what they were getting themselves into, but they had to find something. The more I think about it, the more I realize the state's actually likely going to get smart about this. They're likely going to figure out a way to reserve money for people and give you some time to find a home, to know that you have the money there waiting for you, to know that not only have you been pre-approved, that's one thing, but that you've been selected, you've won the lottery, however they end up doing it, that the money is yours as long as you find a home and close escrow in a certain amount of time. It would be absurd if they didn't do something like that. Because otherwise, all we're creating is a frenzy. It's no different than everybody looking for that $100 TV on Black Friday. There's only one inside Best Buy, and it's way in the back, and everybody ran in and trampled over each other and got in fist fights over the television set. And the retailers learned that wasn't really a good idea. I think the state's going to be in the same position. They're learning that wasn't a good idea. That's not the way that we encourage smart home ownership. And that's what they're really looking to do, is to help people and encourage smart home ownership. So if you haven't already, stay tuned to me. I've got a channel specifically dedicated to the California Dream for All program. So that link should be down below in this video description. You'll be able to see it and watch it and stay on top of everything. I know I am following this very, very closely, and I want to be your resource. I want to be your lender to help you out when it's time for you to make your California dream come true. Thanks so much for listening. Hope you have an absolutely wonderful day, and we'll talk to you all soon. Bye-bye.